Great, thanks very much, and welcome. Good afternoon, everybody, to this Geovation Positive Impact Panel session. This is the fifth in our series of panel sessions that we run at Geovation, and this particular one is all about insuring against physical risk and flooding in the UK. So we've got a great panel that we've put together this afternoon to talk through that. We're going to be exploring the relationship between climate change and flood risk in the UK, and the sector challenges, as well as the lessons learned from abroad. So yeah, it's great to see so many that have registered from a real diverse range of backgrounds and different companies and organizations. Just to keep it quite slick, we're going to kind of scoot over some housekeeping very briefly, and then we're going to basically, on that note, it'd be great to hear from you within the chat that we've got here in Teams, the organization that you're from, the location that you're from. Let us know where you are joining us from today. And also, yeah, please use the chat to converse and ultimately sort of talk about the subject area and post any questions. We might not be able to get to the questions necessarily, but please put them in there because we can capture those and potentially come back to you. So we are hosting this on Teams, as you've seen, and please, on that note, please do put keep yourselves as audience members on mute. Turn your camera off. Please don't share your screen. All those good things. And yeah, we're recording this session as well, and ultimately this is being recorded. We are going to disseminate it after the event and share it with our community on our YouTube channel. So I think because we've got quite a tight sort of timeline this afternoon with the panel that we've got and what we need to get through, without further ado, I'm going to go into the introductions. So first and foremost, myself, Luke from Ordnance Survey. I work for Geovation as the Innovation and Outreach Manager at Geovation. So a little bit about Geovation. It is an Ordnance Survey initiative. Ordnance Survey is a 225 plus year old organisation, but they launched Geovation back in 2009. So we're 14 years deep into the Geovation journey. Now, what do we do? What we do with Geovation support startups and community members essentially to use geospatial data as part of their offering. So to date, we've backed 150 startup companies to launch and grow. We have around just under 2,000 community members now and growing. And of course, an offshoot from that as well, we've created jobs along the way, 1,500 plus jobs. And those startup companies have raised funding themselves beyond the funding that we provided them with. So we describe ourselves as the home of the geospatial startup ecosystem, which is more than just startups, although they're an important part of what we do. It's a community, so it's open to all. So it's a shameless plug here just to Geovation. Do hit our website and join us as a member if you wish to get our newsletter. Join us on Slack, which we use to link up with our community members. It's literally open to all. That includes startups, SMEs, corporates, academia, and everybody and anybody. It's a very open innovation approach that we take. So a link to the join the community has been provided in the chat by my colleague there. So yeah, do consider that. We run accelerator programs at Geovation. So we run 3 programs that come with funding as well. So startups get a grant fund and it helps them stay afloat within those early years, early months even, because we back very early stage companies through the accelerator. And we do that in partnership with the HM Land Registry with their PropTech accelerator, obviously with Ordnance Survey, our geotech flavour, and with Register Scotland as well. And north of the border in Scotland, we run accelerators under the Geovation banner with them. We have our own bricks and mortar, our own space in London, the London Geovation Hub, but we also have a partner hub network with 6 partner hubs around the country, and that it keeps us engaged and nationally, which is an important thing, of course. Another USP with Geovation is we have this in-house tech team. So 4 developers that ultimately help the businesses build up their technical aspects of their offering, as well as a business team that helps them craft their business model and their go-to-market propositions. So our aims and ambitions about launching, growing and supporting startups in the geospatial and property sector. And we do that with our partners, as I've mentioned. So not going to go over the sort of the housekeeping again. I'm going to go into the subject area that we're discussing today, which is, of course, insuring against physical risk and flooding in the UK. So just some stats that I'm going to roll off before we introduce our panel and a bit of an introduction here. So welcome once again to this 5th positive impact panel that we run at Geovation. Today, we're exploring the increased flood risk in the UK as a result of climate change, as well as the tools and strategies employed by insurers as they work to mitigate against risk against physical assets. To provide an overview of the problem, the Flood Hub states that 1 in 6 English properties are at risk of flooding from rivers, sea, and surface water, and this is expected to increase due to climate change. Something validated by the UK's warmest year, one of the warmest years on record, and the wettest winters predominantly occurring in the most recent decades. And that research from Oxford University and the Royal Meteorological Institute has found that climate change has made devastating events such as Storm Desmond in 2015 59% more likely. So by the 2050s, it's estimated that 2.6 million residents could be living in high-risk zones. Economically, flooding has been estimated to cost the UK around 1.3 billion annually, with vulnerable low-income households disproportionately affected, with many lacking essential insurance. Total economic damages from the winter of 2015-16 floods were estimated to be around 1.6 billion, with 32% of the damages occurred to the business sector. So today we're exploring the tools, the methods, and the methods that insurance use to protect against these growing flood challenges. So first, before I introduce the panel, I'd like to hand over to my colleague James at Ordnance Survey to introduce some of the work that he's doing with OS and our partners. Yeah, and I'll recap some housekeeping after that directly afterwards. But James, over to you.
Congratulations, Luke, on going through that with all the pings taking place. I think a lot of people are attending about 10 minutes in, so no worries. But you'll see I caught fire a little bit early. So if you have looked at the chat, you'll see some beautiful examples there of how Ordnance Survey's worked with both insurers and banks. Nothing speaks more about Ordnance Survey than seeing a case study, so do have a look at those. If I say Ordnance Survey, most people think walking in the Highlands, orange and pink maps. Only about 8% of what we do. We have 500 licensed partners. I manage about a handful across a range of sectors: utilities, land and property, financial services. And financial services is a key one. It's one very close to my heart. And I must say it's lovely to see a lot of people here on this call today. Some of them are customers, some of the partners I know, and without our partners, we can't bring our solutions to market. So it's very important we have these sessions. And fundamentally, what we do is we capture everything in Great Britain. If you trip over it, fall down it, you can see it. We have 250 surveyors out there in the field capturing all this information, very rich property level information. Equally, we work very closely with public sector and local government to capture addressing data. And it's addressing data that has really struck a chord with the financial services market. It started with insurance and underwriting. And flooding is absolutely key to this, because we know flooding is one of the key perils in Great Britain, the United Kingdom. So if I was to use an example, and you can see this from the Hiscox case study I've popped in there. If you had a postcode and one property was at the top of a hill, the other one was at the bottom of the hill, they could be underwritten exactly the same way, because the flooding data would say all of those are potentially a high risk. Well, that's not technically fair. That's not fair for the insurer. It's not fair for the broker. And that's where the intelligence like Jill Boulton, our lovely guest here, starts to bring in the flooding data and say, actually, you can get down to very specific detail with your flooding. It could be fluvial, it could be pluvial, surface water runoff, all these areas which actually would go down to what we call a geocoded level. So a pinpoint inside a property. That way you can start to discern a little bit better in terms of how you would price a policy, and therefore it's fairer for the consumer, and insurers, brokers can start working on that retention, understand a little bit more about their accumulated risk, and also understand a little bit more about the sorts of risk they may be willing to undertake, particularly in a time like now, when we've had things like the statement of principles turned into AddressCloud, what they're prepared to cede into those bodies. Oh, sorry, bit of interruption. Sorry. And also things like the climate stress testing that many of you will be involved with, I'm sure, or certainly the financial services have been, when it comes to Bank of England and climate stress testing, and all the perils that we've got to look at over a 10-year project, which leads neatly into Nationwide. So Nationwide has been one of our big supporters from the banking and building society side of things. They were one of the first to approach us in terms of adopting something called the Unique Property Reference Number, or UPRN, that many people on the panel might have heard of, and equally some of you might have heard of in the geovation space. Unique to local authorities, we work closely again with local authorities and a company called GeoPlace to collect up to 20, 40,000 changes a day, and all the local authorities across Great Britain. That's 380 of them. feed into a monthly cycle of address refresh, which you can imagine is pretty important for the financial services industry. You want to know what's been demolished, what might be built, what changes in function there's been, just to help speed up the process of an application for an insurer, whether it's personal lines, commercial lines, high net worth, whatever it might be. That information all flows through to our address-based product with that unique property reference number. That unique property reference number doesn't change from a property. It remains the same throughout its life cycle. And for that reason, it's particularly valuable for the PELS modelers because they can put a PELS score of maybe high to low, red, amber, green, whatever it might be, goes on that UPON and it gets sent to the insurance market. And the insurance market will look at that and say, actually, even if somebody like me goes onto a price comparison site or goes direct, they may type in my address and it's something that maybe there's a vanity address behind it, or maybe you've put in a slightly different postcode. Our address data helps clean that address for them. And with the UPON, they know exactly which address has gone through. So it helps speed up that process, particularly if it's a new build area. And down here in Southampton, you will always see new builds popping up, whether it's student accommodation or 500 new houses in what potentially could be a floodplain, God forbid. But let's be honest, climate changes, meteorological elements change. All those addresses for pre-build start to feed into that mechanism. And someone like Nationwide looked at that and said, actually, what's going to happen in a few years' time when pre-builds start to build in this area? Are we over underwriting? Are we over lending in these areas? Do we need to do a little bit more of an assessment when it comes to the PELS data that gets flown through as well? And they work with a range of partners like HomeTrack and Experian, Esri, all these brands that you've probably heard of, but also some more less familiar ones as well. And it's all about, for me, pulling together that knowledge. We're not PELS modelers ourselves. There's people on this panel who will be able to talk about PELS modeling in much more detail, but we help understand some of the PELS modeling and that relationship with the PELS modeling. Whilst we're talking about flood today, of course, there are others. There's subsidence, there's fire, windstorm damage. All these have some sort of geodata connection. And it's only through our partners that we can do that. And as a geovation side of things, we're looking for the next big thing. We're looking for someone to come and challenge us to say, actually, have you ever thought about doing this ordnance survey? Could we partner up with another partner to help support the financial services sector as they face challenges from the Bank of England climate stress testing? And it's worth noting as well, of course, whilst we have all this rich address, which goes beyond Royal Mail Path, most people will be familiar with Royal Mail Path. We capture maybe 14, 15 million records more than Royal Mail Path. And again, all that monthly cycle. We also capture the property data itself. And that's, again, the next stage that I'm very keen to explore with our partners and those supporting us and in geovation to see how that can help. Everybody gets asked those questions, how big is your property, what material and construction, what age, what roof type, those sorts of things. We do capture an awful lot of that information, but making it accessible so you don't always have to look at a map. You just get the answers is where partners start to play a part. And those of you who've looked at our website, you'll notice that we're shifting to something called the National Geographic Database. That will be a daily update of addressing and property capture information that could all flow through into a solution to put you at the forefront of what the financial services market really looks for, whether that's pre-builds, whether that's post-builds and demolishing, or whether it's also just being able to pre-populate some of the questions that insurers and banks have to ask their customers. Again, it's trying to make that life a little bit easier and make sure our data remains relevant. I've probably exceeded my 3 or 4 or 5 minutes there, Luke, so I'll stop there.
Thank you, James. No, absolutely
Suffice
fantastic.
to say, a lot going on, and after the webinar, feel free to reach out to me or indeed anyone else on the panel, and I'm more than happy to go through in more detail.
Absolutely. No, thank you very much, James. Interesting and a great way to build on that introduction that we've done. So very, very, very quickly, just housekeeping one more time for those folks that have joined us and didn't hear that at the beginning. Obviously, we're hosting this on Teams. Please do keep yourselves on mute, turn your camera off if you're an audience member, and we will be recording the session and putting this up on our YouTube channel after the event. Please keep the chat going within the chat as well. So without further ado, it's now time to meet our lovely panelists, and I'm going to pass over to them now to introduce themselves briefly. So first and foremost, Jill Boulton from AddressCloud. Would you like to introduce yourself, Jill?
Hi, I'm Jill Boulton. I've worked in and around the insurance industry for more than 30 years. I happily retired about a year and a bit ago, but I was just too excited by new developments, so I'm back. I've mostly worked in pricing, and then I built the first national scale flood model for the UK while I was at Aviva, and then carried on in flood mapping and modelling with JBA. After I retired, I've moved on to AddressCloud, and there I'm working to help insurers use the data, because it is a really complex subject and they need to understand how they can get the best out of the data, not just the flood data, but other perils and also the property data. As James was saying, understanding your construction type, what the building is, whether it's got a basement, has a huge impact on the actual cost of flooding. So that's me.
That's great. Thank you very much, Jill. And over to you, Avi, from Previsico.
Chief Operating Officer of Previsico. I'm a former academic at Loughborough University, where a team of academics have been spending the last 20 years building a new type of flood forecasting technology, one which leverages live simulations to be able to predict, in particular for surface water, where it might occur in the next 1 to 2 days. And we have, it was a long-running research project, and about 5 years ago, following a very successful POC with the Cabinet Office and several local authorities, we decided to spin it out. And first thing I did was move to Geovation, and really enjoyed the community there. Over the last 5 years, we've been building up the company. So now we work with 200 kind of corporates and councils to provide them with an early warning system to help them prevent loss more proactively. And a large amount of that is also done in partnership with insurers.
Fantastic. Welcome, and thank you very much. And Tina from GallagherRe, over to you.
Yeah, hello, and great to be on the panel today. I'm looking forward to the discussion. So yeah, my name is Tina Thomson. I work at GallagherRe. So GallagherRe is a reinsurance broker. What that means is that we support insurance clients with placing their own insurance cover, which is called reinsurance. My role at GallagherRe is I'm the global head of research. I'm leading our Gallagher Research Center, which looks to bring academic expertise into our industry and help us innovate and develop what we call our view of risk when it comes to understanding catastrophe risk, for example. I'm also the international head for catastrophe analytics, and that's really where my background lies. Throughout my career, I've been involved in catastrophe analytics. I've worked at vendor companies developing probabilistic models, but I've also worked on the direct insurance side, property and casualty reinsurance, and most recently I landed at the reinsurance broking side. I'll keep it brief and stop here. Thank you.
Great, Caroline, and welcome. Tina, sorry, and over to Caroline from Verisk.
Hi, good afternoon, everyone, and similarly, really looking forward to some bright discussion today. So, my name is Caroline McMillan, and I work at as a director in the research and modelling team at Verisk's Extreme Event Solutions. So, some of you may actually be familiar with our kind of former name of AIR Worldwide. I'll just put it out there, but we are part of that sort of Verisk family now. We're a global catastrophe modelling vendor and sort of provider of software solutions. So, we are the ones that sort of providing flood models to the kind of insurance and reinsurance industry, which is the primarily use of those models. But we also work with sort of government agencies, NGOs, and kind of within that public risk sector. So working with institutions like the World Bank, the UK Centre for Disaster Risk Protection as well, to understand sort of risk outside of that insurance sector. I've been working in catastrophe modelling personally for just over 12 years, all at Verisk. Prior to that, I was working as a postdoc at Cambridge University.
Great stuff. Thank you, Caroline, and welcome. And last but no means least, Mark from the Environment Agency.
Thanks. Yeah, Mark Todd. So I'm a manager in the mapping and modelling team within the Environment Agency. So I sit within our flood and coastal risk management department. And my team's focus is a lot on the sort of business change and the future direction for our mapping and modelling in relation to flooding. And yeah, I mean, I suppose my experience, I've been within the organisation for 20 years now, both at a local operations role plus at a sort of national level, just, as I say, in the direction setting. But thanks, Luke.
Fantastic. What a great panel we've got. Right, so into the questions now. And I've got 3 broad buckets of questions, essentially, that I'm going to be addressing to the panelists. The first one is around GB flooding and insurance. The second area we're looking at is the challenges and opportunities. And thirdly, we're going to look at international lessons. So the first question in this first section on GV flooding and insurance is directed back to you, actually, Mark. And the question is, how frequently is climate change influencing the frequency and severity of flooding in the UK, and which risks should be on our radar?
Well, thanks, Jake. So I think, so I can't speak for the entire UK, but I do think there's a lot of stuff that applies to all of us, really. I think, we can say probably with a lot more confidence than we used to in the past that climate change is having a real clear impact on flooding and more broadly on the weather anyway. I think for me, what I find strange in a way is how used to the fact that we're getting used to all these record-breaking years. It feels like every year is a record-breaking year now, doesn't it? And I think that sort of sets a very clear direction for us about where things are heading. I think it's record-breaking in terms of the heat, in terms of the rain, prolonged dry weather. The list just goes on. So I think the steer for me, like many years ago, it is an interesting experience. I think back like 20 years, we used to talk about a flood season. I don't know if people can remember that. It doesn't feel like we have a flood season, and I haven't heard people mention it actually for at least 10 years now. The very sort of dynamics of how we respond to flooding has changed. Even a few years ago, the steer was that we're going to be getting, drier summers, wetter winters, and just an increased chance of intense storms. And that seems to be playing out, I think, more and more. I think for me, like the risks sort of as we're looking forward is more of the same, but more, which is a bit of a weird message, I suppose. I think, it's just accepting the fact that we're going to be having, we've got sea level rise. We are going to be having more intense rainfall. I think that the stats were 59%. I think you said earlier on, 59% more rain in winter by 2050s. The stat that I thought that just, and I was trying to remember it, was just, I think there's something from a Met Office report saying something like by 2060, 2022 will be a normal year. And so for me, that's quite a sort of getting my head around things. And so I think for us, the risks and the hazards are really around the factors that we're going to be getting this more often, more frequently, and it's how we respond to the level of increase in risks. And I think that's part of why we're trying to, work towards having a more resilient nation, just because it is about the fact that with all this, increased frequency, there's going to be just so many things we're going to have to adapt to and manage in a way we haven't done previously.
Absolutely, yeah. So that's great, Mark. Thank you. But building on that, I guess that question over to Tina now, and in terms of the role that insurance companies play in flood risk management, it'd be great if you could just sort of talk to that as a question. What role do they play?
No, absolutely. I think broadly speaking, what insurance and reinsurance provide are financial ways of mitigating the risk and providing the financial means to help rebuild after an event. So it's all about risk management, right? So if you are yourself, if you think about the type of policies that you take out, whether it's car insurance or you're a homeowner and you want to insure your home against such damages from weather-related perils, all you're doing is you're kind of transferring that risk, if it happens, that you have then that financial support to rebuild, right? And that's vital, because if you look at countries elsewhere where you don't have such insurance networks in place, it falls ultimately on the government to rebuild. So I think insurance is really vital. It really does help promote resilience. I mean, it's only one aspect. There's, of course, the whole side of the response, in the wake of an event, whereas insurance is really post-event when it comes with settling claims, providing the financial support, etc. But I think insurance plays a much wider role than that. I think it's about raising awareness to help promote and incentivize insurance take-up, and I think that's where AddressCloud will come in. I'm sure we'll talk a bit more about that as well, because if you look at the what we call penetration rate of insurance in the UK, so this is what we call the take-up rate of how many people actually buy an insurance cover. It's not perfect. It's fairly high in the UK to say, but there's still coverage gaps, and the reason why AddressCloud, which is the sort of government pool to help again, make flood risk affordable and available was put in place because flood insurance wasn't sort of widely accepted, or it was very, very expensive in high risk areas, which we call risk adverse selection, right? Because as insurance companies, you use, and I know we'll touch on all of that, but you use tools like hazard maps, etc., to identify where where the high risk properties are, and if you have a more prudent underwriting strategy where you don't want to take on so much risk because of the likelihood of paying out claims, you might not decide to underwrite high risk properties, for example, and that means then insurance is not accessible, or it's very expensive in those cases. And anyway, I can go on all about that, and I know we'll touch on many of these things, but I guess in a nutshell, I think insurance is really vital, even though maybe most of us hate it because it's expensive and a pain maybe if you want to get your claim settled. But when something does go badly wrong, I think it is very helpful in terms of the financial support that it provides. But I'll stop here.
Absolutely, team. Thank you for that. And over to Jill is going to build on that again, really. And Jill, in your experience, what are the tools and strategies then that insurers employ to understand and assess the flood risks?
I think with insurers, I mean, they also provide that role of policy making, that they are big enough to be able to talk to government about where we build houses and how we build houses. So quality data is at the absolute forefront of looking at properties and their flood risks. Flood hazard maps obviously come in, but it's also about average annual loss as well. So houses in very risky areas have a very high average annual loss, and the flood maps can hint at those, but how you price is never that simple. And property location has come on in leaps and bounds. As James was saying, when I started in insurance back in the 80s, you literally were looking at districts. It was almost like city, town, village, rural, and that was as far as you could actually disseminate. Now we're down to, with JBA's maps, 5 square meters, and you actually get that very fine resolution. And with what the OS are doing, you're now looking at building outlines. And if you can look at a building outline, it's even better than a UPRN, because you're actually looking at the risk throughout that property. So big houses obviously have more area than small houses, and you wanting to know the difference. So it's very much about the quality of the data and insurers understanding what they can do with it. And insurers the differences are as wide as the world, that some are very risk seeking and some are very risk averse. So being able to use the data in a way that allows them to follow what their primary direction is really helps. So yeah, I would say data is the key.
Basically, absolutely, Jill. Thank you for that. And Avi, I'm going to ask you a question again. It builds on that as a nice segue, really. But in terms of flood detection and forecasting and how insurers make use of that, how do they make use of that, and who benefits from the use?
So I think when it comes to kind of flood data in the UK, I think especially when we look at, let's say, what the Environment Agency provided, there's 2 main sets of data. There is the overall flood risk maps that are available for surface water, river and coastal flooding. And those are already valuable in kind of showing return periods, what a 1 in 100, what a 1 in 1,000 year event might look like. And then you also have the flood warning service, which uses kind of flood outlines and shows based on kind of water levels what might be. What we do, and we complement that particular technology that's already out there by also running live modeling, because the challenge with any static data, particularly around flood risk, is that every event is different and local conditions can play a huge role. And so where the flood risk maps are really, really useful for long-term planning, and can also be really useful for understanding the impact of an event. The truth is that every event is very different. So the same level of rainfall can cause a very different kind of flood depending on how rapidly it falls or where it falls. And so what we've been doing is developing a new approach where we're continuously simulating what is expected to occur based on the current conditions, monitoring the current conditions on the ground using different data, including our own sensor network, and being able to kind of provide a bit more kind of holistic overall warning, particularly for the type of events that often catch people off guard. Because right now, with existing risk maps, sometimes some areas will be worse affected than the risk map might typically indicate, just because of local conditions.
Great. Okay, that's interesting. Caroline, this final question in this section around flooding insurance is just to build on that once again. And in terms of flood modelling, how does flood modelling differ from and complement flood detection and forecasting, and how is that used by insurers?
Yeah, that's a good question. And I think really to understand sort of flood modeling as a generic term, I'm going to bring in a couple of terms and maybe take a little bit of time to sort of explain what a catastrophe model is. And I think to understand for this audience, why do we need catastrophe models? We have to look at insurance policies themselves. So, typically they're valid for about a year, which means that when an insurer is thinking about how much to charge for that policy and some other risk decisions later down the line as well, they need to think about what the risk is over the course of that year. So, Avi has just talked about, all events are slightly different, and we can make use of data in a very short period of time. But in order to assess kind of the risk over the course of the year, I don't think the forecasting quite has the same level of skill over that kind of period. So we kind of need to look for different methods. Now, some of you may be familiar with kind of more traditional actuarial techniques. They can be used to sort of understand risk for things like life insurance or even motor insurance over a period of a year. And the basis of this is because there's just a large volume of claims. And, with all respect, accidents and sort of health kind of, they occur in a fairly repeatable or predictable manner. So those kind of techniques can be used there. Where I think, NatCat just is not that, flood especially just does not conform to those kind of criteria. And so that's why we almost need to take sort of a different approach. And this is where a catastrophe or a probabilistic catastrophe model really comes in. So really the purpose of a CAT model is to provide an insurer or someone doing the risk assessment with a large number of simulations about the expected loss to a given property or maybe a portfolio of property. And I stress that idea of loss there as being the kind of important one. So how much, if I take on this property or this series of properties, how much is the expected loss that I might experience next year? Now, in doing this, whilst we're not looking to forecast or predict a specific, flood event, what we do need to do is build up a catalogue of physically realistic kind of flood events for the next calendar year. So we'll be answering questions within our hazard module of, what is the frequency of floods, where they're going to occur, what time of the calendar year do they occur? What is their intensity? So, how deep are those floodwaters once they occur? And we do this through a kind of, excuse me, a kind of either a physically based or a statistically kind of robust simulation of the hazard. And we do this many, many times. This is what's known as these sort of stochastic simulations, so that we can build up this kind of probabilistic view of what might happen when it comes to realistic flood events next year. Now, once we have that kind of catalogue of flood events, we then need to estimate how much sort of damage these events are going to cause to the kind of maybe property that we're insuring or the portfolio of properties. And we do this by entering information on the exposure. Jill has already stressed just how important high quality data exposure is. We talked about sort of building properties. We need to know where the risk is located. It might sound basic, but actually it's a very, very important input for a flood model. Knowing things about the replacement value of the properties. How much would it cost, to replace if it was 50% damage versus 100% damage. And then the properties of the building, we've touched on this. Anything that's really sensitive to elevation, the presence of a basement, is the insurer insuring from the ground floor? Perhaps they're insuring an apartment that's based on the third floor, for example, a very different risk profile. So gathering all these kind of inputs on the exposure, that kind of gets amalgamated within what we call the vulnerability module of a CAT model. So it's taking those hazard footprints that we've generated, taking the exposure, overlapping them together to work out, again, probabilistic distributions of expected damage. Now, the very final kind of module of a CAT model is what we call the financial module. So here, this is where sort of insurers, brokers will work the magic, applying all sorts of, simple to very complex terms and conditions to get sort of a range of risk analytics. So here we're changing those probabilistic distributions of damage into probabilistic distributions of loss. And so that's what an insurer would use perhaps to, work out how much to price for an individual risk. But then, they might find themselves with a huge portfolio of risk and think, actually, I can't retain all this ourselves. So this is where sort of Tina and GallagherRe could come in and sort of thinking, well, the insurer would need to take some insurance themselves. So this is where reinsurance comes in. And, the amount that they need to take is dependent on these analytics. The insurer might also need to do some what we call capital planning. So understanding how much money they need to keep in the bank so that if one of these larger and rarer kind of flood loss events did occur, they've got enough capital to keep them solvent and get them through and pay out all their cover holders. So really that in a nutshell is a little bit about, why we need CAT models, why we need a different technique, modular kind of components of a CAT model, and some of the kind of decisions that they're used to support within kind of the insurance and reinsurance sector.
Absolutely fascinating to hear that, and from each and every one of you in that section. Thank you. It's really built the picture for me certainly, and hopefully for the audience too online. So it's a nice, I feel like a nice moment now to sort of move on to this next section. Then this area that we're going to now look at challenges and opportunities. So it's going to be an open question, but initially coming to you, Mark. But we're going to go around the room now for people's reflections on this question. So the question is, considering the increased focus on flooding, what are the gaps in our knowledge? In other words, what are the known unknowns? And how can we approach addressing them? So yeah, that one over to you, Mark, but then coming to the rest of the panel too.
I think what I'll say, and then probably the rest of the panel will point out all the stuff that I've missed. I think, for me, it's worth just sort of setting some of the context. So within the Environment Agency, we've got a big bit of work that's sort of going through at the moment, looking at replacing or updating all our modeling, just so that I think it's much better integrated with the local modeling. And I think for me, part of that has been about trying to address some of those gaps. So having a better picture of what climate change means for us. I think, being able to understand some of the nuances within individual catchments. I think sort of for me, when I look at this, though, one of the things which we still need to work on and get better at, and it is something we are trying to address, but is that challenge about how things interact with each other, especially in a changing climate. So nothing happens in isolation. You don't get a river flood and then surface water 6 months later or something like that. It's all sort of combined together, and it's about understanding those interactions. I think is a really important thing for us. I think. Yeah, it's just there's a lot of also, I think, adapting to the fact that in the modeling, we used to focus on the past as our what the future is going to be. In a changing climate, you can't really do that anymore. The past is useful, and it's not to say that we shouldn't use that information, but I think there's something about how we look into a changing climate and use science in different ways. The other thing for me is just sort of final thing I think is around communication of flood risk, because it's a very technical area. It's very statistical. It's very everything. And if you just want to get a simple decision of yes or no about something, it can be really hard to sort of dig into it. And when you throw climate change into that as well, it just becomes another layer of confusion. So I think for me, there's definitely something for us, and it's again something that we're looking at, is how we get better at communicating it so that people take action, because I think it all sort of ties them together, because it's like, Tina, you were saying earlier on, around the importance of insurance as part of that resilience. And there's something about that being able to take action as well, which then also, works within the insurance market as well. And it's all those types of things, how they lead together. So I think for me, sort of fundamentals is probably about how we better understand how things overlap and integrate, how we look to the future, accepting the past is important, and then how we communicate all of this so that people take action.
Great, thank you for that. And Jill, your reflections on that in terms of known unknowns and what Mark's just filled us in with there.
Yeah, and it's absolutely right. The past is no indication of what's going to happen in the future. I think one of the massive problems that the industry faces is the lack of information, that it's really difficult to find out where there are basements. It's also extremely difficult if somebody has put some flood protection in place to know the quality of that flood protection and to actually have it on a register so we know it exists. So insurers are sort of fighting blind to a large extent. And, you know, just the quality of data has a long way to go yet. It is improving. And, you know, let's be fair to the Environment Agency, we probably lead the world in flood information compared to a lot of other countries. We're just streets ahead, but we have a long way to go, and we really do need better information to actually be able to improve.
Okay, and Avi, I'd like to bring you in here as well.
Yeah, I think I'd definitely echo a few of those points, particularly around basements, but also wider kind of drainage performance. So I think one thing the Environment Agency did some time ago, which was a really, really powerful move, which was to open up all the LiDAR data. And that's enabled a massive step change in how we understand the topography of the landscape. The two major uncertainties still, though, in forecasting and modeling are the elevation and the weather. So both when kind of planning long term, but also even in the real time, the weather, as people might have noticed over the summer, has been rapidly changing. And so using different weather data sets in an effective way to then provide a good forecast is important. But then also to that other point you mentioned, risk communication. The problem is the insurance industry, but also members of the public are all kind of suddenly being forced to become flood experts and modeling experts. But the truth is that the more you understand, the more you realize you don't understand a lot of it. And this is a real part of the challenge, which is actually there's so much that needs to be done on better communicating some of these outputs, because a lot of people who are kind of semi-tech or have some technical knowledge, but maybe not certain, like professor level, still need to make a lot of operational decisions. So giving them the right information to use, both in terms of long-term planning around risk, but then also around real-time flood response, is such an important area where there's a lot of room for growth.
Communication is key, absolutely. I can hear that. So Tina, over to you to your perspective in.
Yeah, no, I totally agree with all of the points mentioned so far. Maybe if I pick up on what Mark said was looking into the future, and I think that also very much depends on the application and which way you look at it, right? From an Environment Agency perspective, I guess you want to know to what standard of protection you want to build flood defenses, where to build them, and how to make the natural environment more resilient. From an insurance, reinsurance perspective, of course, it's equally important to understand how the perils are changing over time, probably more from a strategic point of view, as Caroline has explained, that, you know, insurance, reinsurance policy are mostly on an annual basis. So it's more important to understand the annual occurrence of the most extreme events and the also annual aggregate summary of annual losses. So I think here is still more focus of understanding that the current climate, if we're talking about weather-related perils and how accurately we can capture and model that. But having said that, climate change equally plays an important role when it comes to stress testing in terms of how much capital reserves you have to keep in place longer term, especially where the regulator like the PRA was pioneering in releasing the first climate stress test to UK and insurers. But I think ultimately, I think the gaps for me sort of boil down to what we call the view of risk, because with any of the models, a model is a model, right? A model is approached in different ways and means, techniques, data inputs, and it gives you one answer. If you use one model and another model, you get two different answers. For flood modeling, there are different approaches, whether you use rainfall runoff modeling or you start off with river gauge station data, for example, to do your hydraulic modeling. Then what does the model actually capture, right? Does it cover fluvial and pluvial? Mostly yes. But as Caroline has really nicely explained how sort of the catastrophe model works, I mean, mostly you look at flood extent and depths, for example, from these types of perils, and then you relate that to what Caroline explained as a vulnerability function that relates the flood depths to the damageability of the property, which then links to the type of property it is, the material it's been built of, the age. Back to Jill's point, the importance of having accurate, building level information. But with that, there are limitations as well, because if you think about flash flood events, you've got velocity that plays a role. If we look at recent events, I mean, looking more broadly across Europe, Storm Bernd, which affected mostly Germany, but sort of an assessment of the flood damage there was actually a lot of the damage was caused by debris flow, not just the flooding itself. There's also cascading effects of perils. Maybe that triggers landslides. What happens if you've got clusters of events, lots of rainfall events, and the grounds are saturated, and therefore, you just get the flooding is much more exacerbated. There's also the correlation of events, which, it's not necessarily all yet evidenced, and there's still sort of research going on, but to what extent can you correlate flooding with windstorm events? I know there's been a lot more work now done in the catastrophe modeling space with tropical cyclones and induced rainfall and flooding, but it's those kind of dimensions where as an industry we're investing a lot of research and we're advancing, but I don't think we're there yet to sort of fully address all of those challenges. And then data that feeds into the models. I mean, we mentioned flood defenses. Of course, that's a vital input as well, right? Because if you want to have a defended view of the risk, you need to capture where the flood defenses are in the UK from the Environment Agency. But then there are, again, assumptions that go into that from, breaching, overtopping, how the model handles that. Obviously, flood defenses age. It's very difficult to accurately model that. Then there's storm surge as well. I mean, we touched at the beginning about sea level rise, and that will also exacerbate the risk from storm surge, obviously linked with tidal movements and clearly windstorms, the wind pushing the waves inland. Yeah, I mean, the list is long. I think there's plenty of work for us to do, but it's good to see that we have at least a good tool set in place to at least start understanding the risks, whether that's, real-time modeling with what Avi does in his company and forecasting to kind of help mobilize things as and when things happen, which is also important for insurance companies when it comes to claims payment and supporting policyholders versus the catastrophe models that we use to understand the risk holistically so we can price against it. The hazard maps, as I mentioned at the beginning, that use that what we call point of sales, underwriting single policies, whereas, for us, especially as a reinsurance broker, we take the ceded portfolios of the entirety of the risk they've underwritten. And that poses a different problem, right? Because we cannot afford to pay for additional location level information to enrich the data. We're dependent on what the insurance companies give to us as information. And we'd love to enrich that with more detailed information because that, again, enables more detailed, accurate modeling. But it's very much dependent on what information is available. And the things that Audit Survey does is fantastic in terms of the level of detail. But making that accessible, if you have a nationwide portfolio, for example, then all of a sudden there are other, factors that could prohibit the use of that if it's cost, for example. So it's all different angles of the way you look at it, the application and the intended use. But I'll pause there again.
Absolutely. Thank you, Tina. Very interesting. The list is long, and ultimately I'd like to bring Caroline in then before James in terms of your perspective on the known unknowns, gaps in our knowledge.
Indeed, and I think Tina's got a very exhaustive list there, and I think actually there's lots of similarities to things I was going to say. As kind of a model vendor, I can't sort of sit here and say there's not gaps because that would just be totally untrue. And what I would say is that we don't just model UK flood in sort of isolation. We're modeling flood around the world, in Japan, in the US, in other parts of Europe, and every word's going to have its own little peculiarities. So we're always sort of, I suppose, pushing the envelope with the state of the art when it comes to sort of hazard modeling and vulnerability modeling. There will be different challenges, for different scales, different countries. And so I'd like to think that, as we kind of, continually update, say, the UK flood model, for example, we're able to leverage lessons learned from other parts of the world. And to go back to the Bernd event that sort of Tina really kind of nicely highlighted, debris flow, velocity, the duration of standing water. These are all sort of lessons learned that we are now bringing to kind of one of our upcoming UK flood updates in a few years' time. So I think it is important to look at what's happening around the world as well, and to sort of bring that and sort of continually push the state of the art, as it were. Compound events has been talked about, correlation and just having, almost in a way, a single view of atmospheric perils, so that your storm surge, your inland floods, your extratropical cyclones, maybe even severe thunderstorm risk at times in other parts of the world, that are all sort of globally correlated and sort of driven by the same processes. And again, as Tina said, we're not quite there yet, but we're definitely very invested and pushing towards these kind of challenges. I think for me as well, just maybe try and find something a little bit different that was already previously mentioned, is this idea of a gap. And I suppose it's not necessarily a gap in knowledge, but a gap in process, right? And so we've talked already about, and Tina and Jill nicely sort of said this, how key like exposure data is, and key down the process of the insurance chain. So, we do have now, I was going to give a shout out. We do at Verisk have a product that will be able to tell you on a location basis whether it is a basement or not, sort of thing. We have some information that people are making these step forwards with those data, and some insurers may purchase that. But it's really the transfer of that knowledge throughout the insurance chain that I think we could be doing a lot better on. So for me, that kind of qualifies under the definition of gap, maybe. I would even go so far as saying geocoding, right? So insurers might have very, very accurate geocodes, but how often is that, transferred down the kind of insurance chain to the reinsurers? And, I think I'm going to call out GDPR, people I've been speaking to, it's not everybody, but there are some in the market that feel like, with GDPR, people have become a little bit more conservative as to what what is a personal piece of information is a lat long, that, and therefore are aggregating things like flood risk at a postcode level, whereas previously they might have had, they might have it a lat long for an insurer, but they don't pass it on to the reinsurers for fear of trying to breach that. So in a way, there's sort of new challenges that even though the tools are there, we're not sort of getting it through the chain. So again, as I said, that I think that for me it would qualify as a gap.
Fantastic. That's great, Caroline. Thank you very much. So, and James, over to you.
I hope a lat long or an X and Y, Caroline, isn't GDPR, but we'll have to look into that if that is the case, certainly connected to addressing. But there were two quick points I was going to mention. I think everyone's touched upon this. One is this nature of predictive analytics. And if you can't get 100% what the answer is, let's use the example Jill gave of a basement. Could you do perhaps some of the work that Caroline touched upon to illustrate that maybe there is a basement there through just understanding what a row of houses, a terrace house, or maybe a commercial site looks like? And is that enough to hypothesize that a certain building may have characteristics based on what you know already? And again, I think Jill made the point, whether insurers or banks are particularly risk averse or willing to take a 70-80% accuracy just to make sure they have some level of understanding. So what is good enough when it comes to risk or when it comes to understanding property itself? So I think that's key parts to it where Ordnance Survey can play a part, and certainly the partners can as well with the intelligence they've gathered. The other quick point I was going to make was about the impact of new builds and on climate. And we know from the government stance that they want to try and build new houses, and most recently perhaps in areas that could be questioned as contentious, in greenbelt areas, by rivers, that sort of thing, opening up of some of these spaces and reducing red tape. Whenever you do this, and all the flood modelers on the call know, and the insurers and reinsurers undoubtedly, that has an impact on how you model flood and what can happen. I think it was Avi that said about utilities and drainage. You put in new water pipes, you put in new broadband. Suddenly, areas which were quite good at absorbing water and quite good at taking all those heavy rainfall hits don't become that efficient anymore. You get surface water runoff. So being able to understand where properties are going to be built and what sort of construction material is going to be laid, roads and all the utilities mentioned, telecoms, drainage, that will have an impact on the modelling and have an impact on where we're likely to see floods in the future, I would have said. So the more we can keep our ears to the ground on that, the better.
That's great. Thank you, James. So on that section, is there any final reflections from the panel at all? Just as another thing to wrap that section up, because we are rattling through, actually, as looking at the time, we're kind of, coming up to past, and I did fear that would be the case, but it's not through lack of absolutely brilliant information that we had shared by the panelists. But I think what we'll do is we'll come on to the last section. I have to skip over one of the questions that we had crafted out around the protection gap in the UK, in a UK context. But, you know, ultimately we've kind of touched on it, quite honestly, in the previous responses there. So just going to have this last kind of question that I'm going to pose to the panel. And in light of the fact that we've got another, you know, just a few more minutes actually to give your perspective. So on the international lessons, really, it's an open question. I'll start with Caroline, if I might. And so the question is, what does the UK do well when it comes to flood forecasting and modelling for insuring against physical risk? And when looking internationally, what could we do better? Are there any lessons learned from overseas that we could take?
Well, I think I need to call out the UK here. I think we actually do a really stellar job compared to sort of other international countries in making, you know, high resolution, but also quality data sets available open to the likes of commercial properties. So they are commercial companies, so we can use them in developing these models. I think, you know, when we look at sort of developing UK-wide flood models, you know, this data is all available for us to use. I'd say that there might be frustrations at times, because I'm going through this process right now, that we might have to go to the devolved nations to get the same pieces of information, and the process is a bit different. But realistically speaking, compared to trying to get these for some other, even European countries, but certainly in Asia Pacific, you know, the process is incomparable, really. We're doing a great job there. I think, you know, the point I would stress is I think we have a great research network amongst academic universities as well. I think, you know, that kind of interaction and recognition of how important that is, both for sort of training the next generation of maybe CAT modelers that are going to go into the market, understanding sort of flood risk, the next kind of products as well. And I think there is, you know, we're on the right track in thinking and recognizing, our funding bodies recognizing that, you know, we need to put funding towards, you know, good quality sort of flood modelers and products. So, you know, personally, I think we're doing a stellar job.
That's great. Great to hear. That's good. And Tina, I'm going to ask you to reflect on Caroline's take on that.
Yeah, no, I think I agree with Caroline that actually the international community looks a lot at the UK. I touched on GallagherRe, for example, at the beginning, you know, how well established our insurance network and coverage is, and, you know, supporting the affordability and accessibility of flood insurance cover. And whilst there are a few other pools internationally, whether you look at France or Spain, that cover a wide range of perils, including flood, there aren't that many available globally, because, I mean, for many other perils there are, earthquake especially, but, you know, for flood, it's still a very, very challenging peril to model, as Caroline has hinted on, because it does vary by geography, topography, you know, weather patterns, etc. But to model that adequately is still a challenge, and then also define sort of a public-private schema around this that triggers appropriately, reflects appropriately the history, and making sure that you know, the financial support can flow in countries where there is no insurance network in place. So again, that's a topic for a whole nother session, but I think there is actually a lot of other countries looking at the UK who have been pioneering in this field, and we touch on the Environment Agency as well and all the good work they're doing. So by all means, it's not perfect. As we said, there's many gaps and a long way to go, but I think it is important to look at it at an international global perspective as well, to see how things are developing elsewhere. And of course, if there are lessons that can be learned from other areas, especially also in the US, then by all means, it's important to take that into consideration.
Great, thank you. Okay, I'm going to come to Jill next, then Avi and Mark. But Jill, is there anything you think we could be doing better in this respect?
Well, again, I'm going to call out the Environment Agency. They've made a huge difference by making data available, and I wish their colleagues in Scotland and Northern Ireland would do the same. And flood mapping has a stellar income from global insurers. Based on what we did in the UK, many global insurers now buy data globally because of the way we model in the UK. So, you know, thanks to the EEA, we started it back in 2005, and it's just gone from strength to strength.
That's awesome. Great to hear. Avi, concluding remark, I guess, on this.
Like, quite just to echo what everyone else said, and I mentioned it earlier, there's so many data sets that have been made available and open access that have been really valuable. and also good to see Met Office now also making a lot of their data available. So that's good. I think the gaps I mentioned earlier also around drainage is certainly, it's not the Environment Agency's responsibility, it's more around the local authorities and water companies, but that is one of the next big frontiers that I'm not sure I found a country that does it amazingly, but I think there's going to be a lot of lessons from abroad that we can learn from on how we can better present, make that data available and useful.
Okay, thank you, Avi. And Mark, over to you.
Yeah, I've got a swirling head, even though it's not all my work, but thank you. I think it's very kind words. I think just like a reflection for me, I don't think we do what we do because it's fun. Well, it is. It's fun's not the right word, but it is very rewarding. But I think the thing is, the reason we do what we do is because we need to, really, because of the risks faced within England. I think for me, it's nice to hear around the open data element, because that's something that I've found has really made life much better for us as well, because there's nothing better than being able to be open and transparent. It means that it's easier for others to challenge us, and I think challenge is healthy because it makes us better. Just sort of reflecting around the national examples, so we do quite a lot of work actually engaging with different groups. So I just sort of think, a couple of weeks ago, my team was chatting to folk in New Zealand around collecting information from previous floods and just sharing from that. And I think it's really valuable. You realize, I think, the challenges we have, but you also realize some of the things that make it slightly easier for us. I do remember chatting to someone from Australia and just thinking about the scale. England's a lot smaller than Australia, and so the challenges you have for things like that, and it's interesting to hear the different dynamics. And also, again, I remember chatting to folk from South Korea and just listening to the technology they were using and applying to how they're forecasting and responding. And so there's so many things you can learn from each other. And another thing, just sort of mention around the sort of working with the devolved nations. So we actively have a group trying to work and tie things together. And I think there's always going to be differences, just because we all have differences within legislation and policy at a government level. But there's definitely stuff that I think we can do more around that joining up within the UK. But I think that I just feel like there's always things we can learn from each other internationally, and there's just so many things you gain. And I think what's really nice about this sort of a community that we have is that a lot of the folk we work with, so folk like on the panel here, working with different insurers globally, it's all those things that we can get back, and it's all those little things that almost just become embedded in what we do. And so I think we learn a lot internationally, and it happens so sort of organically that it's sometimes hard to notice where it's happened. So I've gone completely off topic, but I think for me it's just great. There's just something really, I think, powerful about us as a group, and how we can help others, not just locally but internationally, but also, working together, we get so much more.
Absolutely, and thank you for that. And James, over to you for a concluding remark before we wrap.
No, of course, and it would be short and sweet, because I agree with everything that everyone said on the panel. I think what's always interesting, I mean, we are spoiled in a way, I think, because the UK does have such rich data, be it PELS data or geodata from us, and indeed the relationship with the insurance market here is strong. And I really take on board the point about these evolved nations and us trying to work better together. And we are part of the Geospatial Commission, which many people may have heard of, the Land Registry, the Met Office. There are moves to try and make that more harmonious, which is good. What I'm always interested in, and I think both Tina and Caroline, possibly Jill as well, touched upon this, in the sense that our climate is changing, and what can we learn from countries that have been through those climate changes that we may need to prepare for, whether it's increased rainfall, storm surge, all those sorts of things. There will be certain mechanisms, certain ways of modeling that other countries do because they're familiar with it, that we may need to prepare for, or just make sure that we understand how this could impact. We're an island nation, and we've got coastal towns, coastal cities, and it's not just about properties, of course, it's about transport networks, it's about business interruption, it's all these things that impact other elements of our economy that we need to make sure that we're prepared for as and when things change. So that would be the only point, I think, from an international perspective that we could start learning from. And as always, the partners that play on an international scale are very useful for us.
Well, that's excellent. Thank you very much, James. Thank you, Avi. Thank you, Caroline. Thank you, Jill, Tina, and Mark. It's been a fascinating panel session. We're really, really pleased with how it's gone today. Apologies, we've overrun just by a few minutes. There's been a lot to get through, and I think, to be honest with you, we could have spared another hour at it, couldn't we? Because it felt that way with the amount that was coming our way then. So just wanted to thank all the audience members for joining today for this, our 5th panel session. As they're all going online. They're on the Geovation website and on our YouTube channel. So please do look out for any previous content that might be of interest to you. A last final plug from me and Geovation with regards to what we're doing next at Geovation. So we've just had our latest cohort of startups that have graduated. We had a showcase last week where they graduated and have come through that. So going to be announcing some news from that in the coming weeks, as well as our new cohort, a new cohort of companies that have come on board. So do look out on our socials and news if you're interested in that. Again, another plug for our membership. It very much is open to anyone. There are no hooks. There's no cost to joining as a community member. So please do look at our membership and look to join up with us. As we've heard, the community is key with lots of these things and being able to talk with each other. So we've shared those links in the chat. And finally, the next panel. So the next panel will be on exploring the sustainability of marine infrastructure. And we've got a date penciled in for November for that one. So again, please do keep an eye on our, you'll hear about that. So that's it for today. Once again, thanks for the panel, thanks to the audience, and thanks to everyone involved. And I hope you have a good afternoon. Take care, everyone.
Thank you, Luke. Thank you, everyone.